Right. Good morning, Melonhead. Got my cup of wake up juice in hand. Happy Tuesday morning, everybody. It is the time for our weekly morning live stream. I hope you Melonheads are well. Hi, Mom. Hi, Dad. I love you guys. And with that, there is, not a lot going on in markets this morning, but geopolitically, the whole world kind of holding its breath right now. Unless you've been under a rock, you know that there is a highly anticipated trip by House Speaker Nancy Pelosi to Taiwan that is scheduled to happen today. And China is not so happy about that. China claims Taiwan as part of its own territory, even though, let's be honest, it has not been Chinese territory for many moons. Taiwan has its own passports, they have their own currency. Even Chinese flights into Taiwan have to go through an international terminal. So, pretty obvious that Taiwan is its own country. China has this fantasy that it's their territory. Okay, we'll indulge. Um, but Nancy Pelosi being third in line in presidential succession, her visit to Taiwan, that is viewed as an insult to China. And truly, my heart weeps for them. Really, there could be tears. And, anyways, China has basically threatened to respond with military force if this visit goes through. There was a phone call between President Biden and President Xi Jinping last week, where Xi took a unusually belligerent tone with President Biden. I guess Xi is not very intimidated by our current sitting president. I can't imagine why. And I can't remember the exact language that he used, but it was something to the tune of those who play with fire should be prepared to deal with the consequences, as if to say, look, if we attack the island or if we take a shot or if we do some other belligerent international act, it's not our fault. You made us do it, which, no, that's not really how that works, China. Anyways, that's all happening today. And there's a lot going on. I've been covering China and the economic situation in China a lot on this channel. And, one of the things I've been saying a lot, and I've been worried about this since last fall, is that China kind of needs a war. Not necessarily that China wants a war or that China thinks they could win a war, but China needs a war. And that's what worries me the most. I'll get into that in a little bit more detail in a little bit. But first, it is 9:18. Markets open in about 12 minutes. So we have to shrink my big melon of a head. And let's take a look at a couple of things. Now, first thing is first, the Silver Symposium. I am going to the Silver Symposium. It starts in just 28 days, August 30th and 31st in Spokane. I will be there. Ninja will be there. A lot of other big financial YouTubers will be there. Everybody in the precious metals in the mining space is going to be there. I've never gone to this event before. I am really looking forward to this. I can't wait to meet some of these guys who I've seen in their interviews all through these last couple of years, get a chance to meet them in person, hopefully make some content with them also while I'm out there. Anyways, there is a link down in the description below to this event. Use that link. You will get 10% off on your tickets to the Silver Symposium. Full disclosure, that is an affiliate link. I'll always tell you guys when I use affiliate links, but I hope to see you guys there. That's always a great time. I've talked to Jim Lewis over Wall Street Silver, Ninja, all these guys. They always say Silver Symposium, that is the one to be at. That's the best one out of all of them. So I am heeding their advice and I am off to Spokane on August 30th. Hopefully, I get a chance to see you guys there. All right, let's take a look at what's going on in the indexes right now. It looks like the S&P, I'm sorry, the Dow is set to open down 109 points or about 1/3 of 1%. The S&P set to open down 19 points, not quite a half a percent, and the Nasdaq set to open down just under 100 points or 0.75%. Markets down a little bit, not a heck of a lot, but it seems like they're kind of like a little nervous this morning, not quite sure what to make of this situation going on in China. So obviously, we will keep an eye on that. Taking a look at the bond market, we saw this morning. The U.S. 10-year yield continuing to decline, now at 2.57% on the U.S. 10-year. And something me and Mish were talking about before we started today, the 3-month is at 2.48. So we're looking at just 9 basis points separating the 10-year yield and the 3-month yield. And keep in mind that 3-month yield, that has a lot of influence from the short term, the overnight rates that the Fed has anchored down at 2.25% right now. So the fact that the 3 month is anywhere near the 10-year right now shows that the bond market is really out of whack right now. Yields continue to decline, even though they just raised rates another 75 basis points. Something I talked about in my live stream on Friday, that head and shoulders pattern in the US 10-year Treasury yield, that it's been completed, and that is predicting a move down to 2.0% on the 10-year Treasury. That is a big move down from the 2.57 right now. And that would mean big time inversion in the yield curve with short term rates significantly higher than long term. Right now, the US 2-year is at 2.89 versus 2.57. So you're looking at 32 basis points worth of inversion between the all important 2 and the 10. So we're going to keep an eye on that. Also, I would add that the 1 month Treasury, 2.17, that is sitting below the Fed's overnight rate. So the bond market is not exactly doing what the Fed wants it to do right now. The Fed is hiking rates, trying to discourage borrowing, even though rates keep going lower. What's causing that? My theory is that is people in other countries running to the US dollar for safety, because globally other currencies are suffering from inflation a lot worse than they are even here in the States. And so they're dumping their euros, they're dumping their lira, their rupees, whatever, pretty much anything but the ruble. They're dumping it and they're buying dollars with it. Well, if you're sitting in large amounts of US dollars, you might as well buy some US treasuries and get a little bit of yield while you're at it. And that's driving the price of those bonds up and the yields on those bonds down. That's my theory on why bond yields continue to decline, even though the Fed is raising rates. It's a little counterintuitive, but there it is, folks. All right, let's take a look at commodities. Right now, we have got gold is up $7 this morning. Silver is down about 9 cents, still over that all important $20 level in silver. Gold trading just below 1800. We've got copper at 353, down a little bit. Let's see what else we have. Oil right now is up just a little at 94, still well below that 100 mark. Natural gas at 780. That has come down quite a bit in the last couple of days. Moving down, looks like we got quite a bit of red going on in the commodity space. And something else I wanted to point to is that grains are down pretty substantially this morning. We've got wheat is down 2.3%, corn is down 1.4%, and soybeans down 1.2%. Keep in mind, the biggest purchaser of U.S. grain is China. And what I suspect is going on in the grain markets right now is that they're kind of pricing in a little bit of animosity, or maybe a lot of animosity, between the US and China right now, and that could potentially affect grain sales to China. So US grain prices are in decline because of that. Obviously, the strong dollar is also having a big impact on US grain prices. And I just saw coming across the tape now, Mr. Mike Binder. Thank you, Mike, from Robin RC Models, for the super chat, sir. He says the last time the 30-year dumped hard, the VIX spiked and stocks tanked, 98 and '08. That's pretty interesting that you should mention that, Mike. I saw a pretty interesting tidbit on, I think it was Twitter yesterday. I can't remember who tweeted it. I should give him credit. I just can't remember the name. But it said that if this were to be the end of the bear market, that this would be the first bear market since like 19 whenever, or since the VIX was invented, where the VIX didn't reach at least 45 one time. And he was basically saying that the fact that the VIX has not spiked over 45 means that the worst of this bear market is not yet behind us. So it's kind of interesting that you should mention the 30-year dumping hard, the VIX spiking, 98 and '08. There's a lot of indicators, a lot of reasons to believe that this bear market is not over. Now, I have to always throw out here, folks, the asterisk. I am something of a perma bear, right? I wear that on my sleeve. I don't see a lot of reasons to be optimistic about the global economy and the debt bubble. I've pretty much been in perma bear mode since repo madness in 2019, even though stocks have continued to go higher that time. So you have to take that with a grain of salt. I'm definitely biased to the downward direction, but what's going on right now, I've kind of talked about how we escaped from this descending wedge pattern, and that at least on the NASDAQ, I have a 14,000 price target in the medium term or the short term, the next couple of months. But I think this bear market is not over. I think we're heading substantially lower still. And I also think we're looking at a second wave of inflation coming this fall, when energy prices start to rocket higher, because the dumping of the strategic petroleum reserve stops right about the same time it gets cold in Europe. That's bad, big trouble for energy prices. So that's interesting on the 30-year and the VIX spiking. I'll have to look at the relation between those two, Mike. I've never actually overlaid the 30-year and the VIX before. That's an interesting data point. But thank you very much, sir, for the super chat as always and your support of the channel. All right, let's see where we were at in the links before. Okay. Speaking of the bond yields, I mentioned on Friday that I had taken out a position. It's the only trade I've made in a while. I took out a position in TLT, which is an ETF that tracks the 20-year Treasury. This one is doing very well. Again, remember when you see Treasury yields in decline, that's Treasury prices going up. So when I saw that head and shoulders pattern in the US 10-year Treasury, I decided I was going to take out this position. So far, it has done very well. And while we're on the subject, I'm going to bring up the 10-year chart so you guys can see what I'm talking about. Let's look at a 6-month chart here. Can you guys see this with my melon in the way? I got to make sure you can see it. You can move it over just a little bit more. There you can see the head and shoulders pattern. This is the 10-year Treasury yield. We've got a headline right here at about 3.5 and a neckline at 2.75. And the implied move of a head and shoulders chart is you take the distance between the neckline and the top of the head, and then you subtract that amount from the neckline. That's the implied move. Well, we had about a 75 basis point loss between the top of the head and the neckline from 3.5 to 2.75. That's implying a move on the 10-year Treasury all the way down here to this line at about 2%. And that's why I have that 2% target for the 10-year. Again, there's Fed raising rates, all the macro trends, but you can't ignore the technicals, folks. Ignore technicals at your peril because this is the visual representation of human psychology, of group behavior. And a lot of times these charts turn into self-fulfilling prophecies. And I got to send a shout out to Sage is backstage. What's up, Sage? I really liked your video about the movement of the Chinese military that you did. I think it was yesterday you put that one up. By the way, while we're on the subject, I'm going to bring some of those up because we were talking about Pelosi's trip earlier. I wanted to show you guys some of these. This is pictures of Chinese military equipment moved in Xiamen. Am I saying that right? In Xiamen, China, right now. And this is the Chinese have promised to do military drills in the South China Sea in response to this Pelosi visit, kind of saber rattling. Think of that. So it looks like this could be part of those drills. This is a pretty big mobilization, though. And this is not the only instance. There's a lot of video on Twitter right now showing these lines of Chinese armored vehicles making their way through. And this is in Fujian province. I'll show you on the map where this is and why that's a little concerning. But I believe these are, I could be wrong, but these look like amphibious vehicles right now. Now, these are not vehicles that can cross the Taiwanese Strait. They would have to be loaded onto a ferry and they'd roll off near the shoreline. Here is another video showing columns of Chinese armor, also in somewhere in Fujian province near the water. Now, I want to show you guys on the map what I'm talking about here. Here is Taiwan. Here is Fujian province. And here is Xiamen. Again, I apologize for my pronunciation if I'm saying it wrong. So any kind of a massive amphibious operation taking place in against Taiwan would start from these cities across the strait. I'm not saying that is what's happening right now. Keep in mind, China is known for bluster, for running their mouth. All right. And it is debatable whether China even has the ability to take Taiwan. All right. Without United States involvement. All right. I'm not so convinced it would be such an easy move for China to take Taiwan. I don't care how many millions of men they have in their army. If you can't get them across 120 miles of ocean, then you don't really have the million man army. The size of the force that China could bring to bear on Taiwan is only a few thousand at a time. And they have to get past the Taiwanese Navy, Air Force, and everything else and actually make a landing on the beach. And when they get there, there's 4 million people on Taiwan. Taiwan, if you count active duty military, reservists, and conscripts who can be called up in a hurry, you're talking several million potentially, or at least several 100,000 troops in Taiwan going up against single digit thousands of Chinese troops who are being delivered by these ferries. I don't think it would be such a cakewalk. All right. Now, it would be unbelievably an unbelievable bloodbath on both sides. Let me just say that. If this war were to happen, the human death toll would be immense from this. All right. The amount of human suffering would exceed anything we've seen, certainly in this century. It would rival the 1900s, the 20th century. And if you recall, the 1900s was pretty much a bloodbath, all right? Especially the early 1900s. And there's not many people left alive today who witnessed all that. So the warnings of history are kind of falling on deaf ears right now. So let's just hope that doesn't happen. But again, I'm not so sure it would be as easy as a lot of people think. You know, China, I mentioned how they're all bluster. They like to run their mouths. They make themselves seem like they're this giant dragon and it's inevitable that they take over the world. I don't think so. I've covered China and their economy a lot on this channel. If you guys know me, you know my position on the CCP. I would not be surprised to see the Chinese Communist Party lose control in mainland China in this decade. And what it comes down to is the economy. Right now, the average Chinese citizen is about to lose everything he has because of this Chinese housing market, because the average Chinese citizen has all of his wealth put in the real estate market. And speaking of the Chinese real estate market, check this one out. This just hit the tape. I believe this was yesterday. Oh, July 29th. This is a couple of days old, but China Evergrande falls short of promised restructuring plan. Remember Evergrande? Remember that giant $350 billion indebted developer? Well, the Chinese government pretty much took over the company, and they've been promising a restructuring plan, i.e., just let everybody know who's going to get ripped off and who's going to get paid back. Well, that plan was supposed to be put out by the end of July. They never did. So not only are they not paying anybody, but they're silent on it. They've said nothing. Like they're not saying who they're going to pay, if they're going to pay anyone. We already know anybody holding their dollar bonds is getting nothing, right? They're never going to pay back their dollar debt, but they're starting to default on their Chinese yuan denominated debt now. Not just the dollar stuff. Now they're defaulting on their internal debts, right? And remember China, we had that video we did a few weeks ago about the protesters and the government sending goons to rough them up. And then the situation with the tanks, I know there was a lot of controversy over the tank story. Was it real? Was it not? Was it part of regularly scheduled drills? Whatever the reason it was, there was tanks on the streets of civilian neighborhoods and cities. Message received, right? Message sent to the people there. So China right now, their biggest fear, I've always said it, China's biggest fear is its own people. It's not the United States, it's not Taiwan, it's their own people. And right now, China's own people, i.e., everybody in that country, is about to get wiped out financially from this real estate collapse. And these companies that have caused it, they're ripping everybody off and they're not paying anyone back. And real quick, I have to send another shout out to Mr. Mike Bender. Thank you, Mike. Mike says, oh, we already saw that one. Where is it? Sorry, guys. I'm a little bit slow on the draw today. Mike Bender from Robin RC Model says, wouldn't underestimate Xi. That guy made reunification his life goal. If he gets a reason to start the process, even better. That's true, Mike. And if you don't know, Mike has experience. He's lived in mainland China. Mike has run businesses over there. So he is more in tune with that culture than I am. Let's just put it that way. And he's saying he wouldn't underestimate Xi Jinping, the president of China. Now, he has pretty much staked his career on the reunification with Taiwan. He has promised that he will deliver that. And Xi Jinping is like, he's right on the edge, right on the verge of pretty much being declared president for life. All right. He hasn't quite gotten there yet. There's this gaggle of CCP party officials that's coming up later this year where they will decide whether or not to bestow that upon Xi Jinping. But that would really concrete or cement his power in place. He's saying if he gets a reason to start the process, even better. Again, I don't think they are ready. I don't think China is ready to begin a military operation against Taiwan. They have been moving in that direction, but I don't think militarily they're there yet. And I think China has incentive to wait because if you put yourself in Xi Jinping's position, he sees the US, he views the US as in decline, right? So why go to war potentially with the US with their aircraft carrier and their submarine fleet when you can wait another 10 or 20 years and wait for that equipment to be run down by budget cuts and by maintenance not being done, right? Make it a much less formidable force while at the same time you continue to build out your own military. So I don't think they have an incentive to start the process right now, but I do think their reason for starting the process sooner is to deflect public anger outward. That I see as their biggest motivation. I think China right now, they're afraid of more protests. They're afraid of more riots, of more bank runs. Well, now they can take all this economic hardship and they can say, see, this is America's fault. This is Taiwan's fault. The guy you want to blame, it's not me. It's not my fault. It's his fault. Everybody get mad at him. That's the reason why I think China would start this thing now versus waiting. And we've seen that before, right? We saw the Russians do that with the Russo-Japanese War in the early 1900s because things economically in Russia were not going very well. So they started war with Japan. They thought it would be an easy win. It was not. The Russian fleet got humiliated, and the czars lost power not too long after that. We saw the same thing in the Falkland Islands. The Argentinian military junta decided they wanted to deflect public anger from their economic collapse. Why not invade the Falkland Islands? They didn't think the British would be able to project power that far across the world. Didn't go so well for them either. And the Argentinian military junta fell not too long after that. So it's a gamble starting a war to protect against public anger due to an economic collapse. It doesn't always end well for the people doing it. It's a 50-50 gamble. Sometimes it works, sometimes it doesn't. But thanks again, Mike. I really appreciate the super chat, sir. As always, the support of the channel is much appreciated. And it is now 9:37. The markets are open. Let's see what the markets are doing right now. We have got the S&P is down 20 points or about 1/2% at 4,098. The Nasdaq is down 46 points or 0.3% at 12,321. That 12,300 mark was an important level. We talked about that in the last couple of live streams. And the Dow is down 212 points or 0.65 at 32,586. So the Dow looks to be leading the way lower. I mentioned that 12,300 level on the NASDAQ, that was important. And that is, let me refresh this chart here. That is right here. This is the previous high from this descending wedge pattern that we've drawn several times here. Can you guys see? And you can. So that was when I thought that the breakout from this descending wedge was confirmed when we passed this previous high here from a couple of weeks ago above 12,300. And the way it works when you have a descending wedge pattern is you take the difference between the top line and the bottom line when the pattern begins, which was right here, and that is the implied move from the breakout, and that implied move puts us up to about 14,000 on the Nasdaq. Again, I don't see a lot of macroeconomic good news on the horizon. I don't see a lot of good things happening for the economy right now. This is just the technicals are telling me the Nasdaq wants to go to 14,000. I believe this bear market rally, we talked about bear market rallies a lot on Friday. I think if we may get up to that level before we bounce off of it and we resume headed lower. I think in the long run or in the medium run, we're still headed significantly lower in these markets right now. The debt bubble hasn't gone away. The inflation problem has not gone away, although the market is acting like the inflation problem has gone away. Keep in mind, our latest CPI print was still 9.1. Got another print coming up in a couple of days here. Um, that's what I see going on in the NASDAQ. All right. Back on the China issue, folks, and I just want to mention it's not just Evergrande not making their payment. Let me just read a little bit off of this. China Evergrande Group, the world's most indebted developer, failed to deliver a preliminary restructuring plan that it had promised by the end of July, fueling risks. Investors will grow more impatient just as a broader debt crisis in the nation's property industry spreads. Keep in mind the property industry, it is about a third of China's GDP. Um, we're not just talking about developers, we're talking about contractors, we're talking about the supply chain. And we've also got this mortgage boycott that's going on in China, right? Well, it's not just mortgage payers. We've got people who have taken out massive mortgages to buy properties, to buy apartments that Evergrande has not built yet. Evergrande hasn't even done any work on these places in 2 years, and these people are expected to make mortgage payments on them. Well, they're saying, no, I'm not going to make those payments. It's the bank's problem now. Evergrande didn't build what they promised they would build. And in China, you make the payments on the mortgage before the property is finished. So thousands and thousands of people have decided to stop making those mortgage payments. Now, it's hard to get an idea of how many numbers because the Communist Party censors, they're blocking this information. But the most recent data I saw said it was over 300 housing projects in over 90 cities had mortgage borrowers not making payments. All right. And that was hundreds of billions of dollars worth of loans. But I also saw that it's not just the mortgage borrowers who aren't making the payments. Now it's the contractors too. It's the guys who say had the contract from Evergrande to do the landscaping around the projects. They've already done the work. They've already spent the money and paid the guys. Well, they had to take out debt to do that. Well, Evergrande never paid them. So now those contractors, that landscaper, he's not paying his loan. And the guy who built the statue that was supposed to go in the atrium, he's not paying his loan, right? And the company that rented him the bulldozers, they're not paying their loans. The whole supply chain. This is how a banking crisis starts. And I've been saying since the fall, watch out for China's banks. When the Evergrande crisis, when the housing collapse turns into a banking crisis, that's when the economy goes downhill. We've already seen some of these smaller rural banks have failed. Now, the CCP has tried to blame this on a couple of corrupt individuals, not any kind of systemic weakness in the Chinese banking sector. We'll see if that story holds, but they're already starting with bailouts. We're seeing some of these regional governments are putting these bailout packages in place, seizing land that has been unused from these developers to try to pay for these bailouts. The problem is that land is now worth a lot less. So I don't think they're going to get the money from that they think they're going to get. So it's just one big mess. And again, it's the economy that I worry about in China. I don't think China could necessarily win a war like this. I don't think China is necessarily ready for a war like this, but I think China needs this war because there is no vote the bums out in China, right? Here in the States, we're not happy with the government, and few people are at the moment. You vote the bums out, right? And then you get a whole new set of bums that makes a whole new set of problems. And then a few years later, you vote those bums out. But at the very least, people get that release of saying you're fired to the people that are in power and then bringing somebody in and at least giving them a chance. There's none of that in China. There is no vote the bums out. You got Xi Jinping for life. So if you're not happy with what he's doing, get used to it. So that that has historically not gone very well for China. That has not gone very well for the average Chinese protester, as we saw in that video of you know government thugs in street clothes just rounding them up and beating them. Just it's what communists do every time. It's communism always ends that way every time. Anyways, in U.S. news right now, we have one big data point is coming out today, and that is the JOLTS job opening. I forget what the acronym is. It's job openings and I think labor transition or something. Basically, the state of the job market in the United States that comes out later today, and that is the market is looking for some hint about what is going on with this 11.2 million job openings in the United States. Right? We talked all about in some videos last week about how Jerome Powell is trying to kill this 11 million job openings because this is threatening to make inflation worse. When you have this big imbalance between supply and demand in the labor market, right now there is way more demand for labor than there is supply. But the price of that labor has not yet gone up. All right. That means if the business owners here, if they want these 11.2 job openings to be filled, then they're going to have to raise the price. They're going to have to offer a higher wage. Well, higher wages, according to the Keynesians, is very inflationary. You pay people more money, they have more money to spend. That money goes out and chases goods and services, causes price increases. So the central bankers do not want wages to rise. So they want these job openings to come down. Now they use wishy-washy language when they talk. They talk about they want to reduce demand or they want to give supply time to catch up. What they're talking about is destroying jobs, forcing people to work for less because they have to. All right. Well, we get that JOLTS report today. That's going to give us some insight into whether or not the Fed is succeeding in bringing down these job openings. The Fed wants this number to come way down in order to fight inflation. We get another data point at 10 a.m. today on that. So we will see what comes out of that one. And I have to send a big thank you and shout to Mr. Luke. Where'd that comment go? Thank you very much, Luke. I appreciate the super chat very much. He says Pelosi will disappear herself to China before the red wave comes this November, and she is investigated for insider trading. Hashtag energy long. If Pelosi hasn't been investigated for insider trading yet, I'm not going to hold my breath that she's going to be investigated for insider trading. Um, The press, they really held her feet to the fire, didn't they? There was that one press conference where they asked her one time, have you and your husband ever discussed his purchase of Nvidia stock and how it relates to the chips bill that you were about to vote on? And she says, "Oh no, absolutely not, absolutely not." And then she just closed her little folder and her pad, and she just walked away. That was it. That was all the questions Nancy Pelosi got from the press. Way to do your function as watchdog of government press. They're too busy circling the wagons around Biden, arguing about how we're not in a recession. We are in a recession. So, no, I don't think Pelosi is gonna be investigated for insider trading, at least not as long as the DOJ is being controlled by the Democratic Party. I don't think it's too partisan right now. Unfortunately, there's 2 sets of laws, folks. There's laws for them and there's laws for the rest of us, and the laws don't apply to them. That is in practice. I don't agree with it. I don't think that's right. It's just the way it is right now. Um, yeah. Now the red wave coming in November, I probably right about that. I think we are looking at a pretty big swing from one side to the other, but never underestimate the Republicans' ability to lose an easy win. The Republicans have time and again been able to snatch defeat from the jaws of victory. So don't put it past them. They'll figure out a way to mess this up. They always do. As far as disappearing herself to China, I don't think one reason I don't think China will really do anything here, at least not directly towards the speaker, because I think they like the speaker right where she is. Call me crazy, but I think the communists tend to agree with a lot of what she talks about and what she advocates. And I don't, it's just a hunch. I don't think they're going to take a shot at her directly. They may fire some missiles. They may fly some fighters into Taiwanese airspace in and out. Um, I don't know. Maybe I'm underestimating what they'll do, but I don't really anticipate that big of an event today. I think there's going to be a lot of jawboning, a lot of saber rattling. I hope I'm right about this. Um, but we'll move on. And I am also energy long, although I right now I have some calls in XLE right now that are not doing well. I do have some long energy positions, and I do plan on going massively long energy very soon. But right now, I'm not long energy, or at least I'm not very long energy. I'm waiting because I think they're going to keep suppressing prices. They're going to keep dumping oil from the strategic petroleum reserve or the strategic political reserve in order to suppress oil prices, in order to protect Biden's poll numbers heading into the midterms. After the midterms, they will stop dumping that oil and oil prices will correct very rapidly to the upside right as it gets cold in Europe. And then inflation comes back with a vengeance, big time. And I think the market is already predicting this. And that's probably one of the reasons why yields keep heading lower. Anyway, Luke, thank you very much. I appreciate the super chat, sir, and the support of the channel very much. And we shall see about the wave come November. Again, don't give the Republicans, don't put it past them for their ability to blow an easy win. All right, folks, we got 9:49. Let's take one last trip through the markets right now. We've got the S&P is down 20.6 points, or at 4,098, down exactly a half a percent. We've got the Nasdaq is down 0.21% or 26.37, sitting at 12,342. Nasdaq faring better than the other indexes. The Dow is leading the way lower right now at 32,529, down 269 points or 0.82%. Again, markets are sitting here with bated breath, watching Taiwan, watching China to see what comes out. Let us pray that our leaders come to their senses and that they don't march us off to war, that they have this under control. You will pardon my skepticism that that is the case, however. And lastly, guys, I just want to mention one more time that I will be at the Silver Symposium in Spokane on August 30th and 31st. Link down in the description below to that. If you use that link to buy your tickets, you'll get 10% off. And full disclosure, that is an affiliate link. I'll always tell you guys when I use that. But this is a great time. I'm looking forward to seeing some of the usual guys like Ninja, like Chris, and Jim from Wall Street Silver, but also hoping to bump into a lot of the other folks that I've seen on YouTube and on Twitter over the years, but I've never had the chance to meet them. This is the silver meeting to be at, folks. If you're going to go to one of these events, I think this is the one. I've heard really good things about the Silver Symposium, and I'm looking forward to going to this. Looking forward to meeting some of these guys from the mining space, see what's coming out of that. And that is on August 30th and 31st. Link in the description. All right, guys, I think we are going to call it there. I want to thank you guys for all your time. I want to thank my Patreon supporters, guys, for everything you do for the channel. I will see you guys tomorrow on our Patreon Zoom meeting. I'm going to look for the link. I'll post that later today. And there's also a link down below to my Patreon should you feel so inclined. And until next time, live small and dream big.